Welcome back to Squawk Box on CNBC. We're just seconds away from the latest consumer price data. Futures have turned positive. Rick Santelli standing by at the CME in Chicago. Rick, the numbers, please.
Yes, our May read on headline consumer price index is down 0.1, largely as expected, and that follows 0.8, which is unrevised and stands at the second worst level, meaning the second biggest drop in headline inflation since 1947. The first was November of 08 at minus 1.8. Now we strip out the all-important food and energy. It's also down 0.1. And last look, that was down 0.4. That stands unrevised. And unlike headline, didn't start in 47. The notion of core started 10 years later in 1957. And last month's down 0.4 was the biggest drop ever in core. Now, let's look at the year-over-year numbers, shall we? Year-over-year CPI is up 0.1. Year-over-year core is up 1.2. So these numbers are very largely as expected, although on the year-over-year numbers, you could argue that up 0.1 is a lot cooler than the up 0.3 we were looking for. You know, when it comes to inflation and just pricing issues in general, obviously what's going on around the globe, it makes it pretty difficult to handicap what the true picture is, because as many countries open up, of course, and demand in other countries remains rather low. Well, just look at commodity prices, for example, highly depressed. And one of those big commodities for a while was oil, and it's come back a large amount. But historically, over the last 7 or 8 years, of course, it's still on the low side. And maybe that's where the big pricing issue will be for the fixed income subsidized market down the road, is how pricing pressures end up after the globe gets its traction back. Joe, back to you.
Thanks, Rick. Stay there, if you would. I'm not ordering you, but Steve Liesman joins us now with more. Hey, Steve.
Hey, Joe, how are you? Some fascinating numbers in here. Just real quick, there's one item that's going up in price, and that's food at home, 1%. I'm interested down the road, Joe, when we do go back, and I guess we're going back now, and demand increases, is supply able to meet that demand? And do you have some turnaround in some of these prices when people start buying stuff? But let's talk about the more prevalent issue here. Gasoline down 3.5%. Energy services down 0.5%. Some of the other items we're looking at, apparel down 2.3%, transportation services down 3.6%. Overall, there's a pretty strong deflationary wave. I believe we hit a record last time in the year-over-year with the 0.3% year-over-year number, and now we've hit a new record down 0.1%. So very strong disinflationary impulse in the economy right now, and we'll see if this becomes an actual deflationary impulse overall. You can hope that things start to settle down a little bit price-wise as things come back, but right now you're probably going to have a couple months at least of residual disinflationary forces in the economy, and that's going to be a wide open, big green light for the Fed to continue with very easy monetary policy.